Good afternoon, everybody. Welcome back to the Opportunistic Trader. We're going to be speaking this afternoon with Angie Setzer. Angie has been working in the grain industry for over 11 years and is currently the Vice President of Grain for Citizens Elevator. At Citizens, she manages 5 elevator locations, maximizing the farm margins, among many other things. Angie has a ton of experience in anything and everything ags, and so thanks for joining us, Angie.
Thanks for having me.
It's great to have you back and talking about the ags. We were just speaking a minute ago. We're in an environment right now where ags are one of the most volatile kind of sectors in the entire market space, which is a change from the past few years.
Yeah, definitely. It seems like every day is a new adventure right now. So, which is good, which is why I liked it in the first place. That's I always wanted to have a job where I never knew what each day was going to bring, and some days I question what I was thinking in that thought process. But it's definitely been a lot more interesting here these last couple months with everything that's been going on.
How do farmers react to that added volatility?
It depends. The volatility to the upside, they really enjoy. The volatility to the downside, they do not enjoy, which obviously makes sense, unless they're an end user of some sort, a feeder or something like that. But, I always joke that as a farmer, you always sell too much in a rallying market. So if you make a sale and the market goes up 10 cents, then farmers kick themselves for that, which, we have to have a conversation about, loss of opportunity versus loss of actual money. And that's something that, we tend to have conversations about with farmers, but you never sell enough on the downside. So when we were rallying into Memorial Day this year, everyone kind of panicked because we really triggered a bunch of sales between 4 and 425 on the December corn board, for instance, or between 10 to 1050 or better on the November soybean board. And everyone was really nervous that was a bad mistake. And then once the December board back down into the 350 range, of course, no one had enough sold. And same could be said for soybeans, even still now with the board being off, $1.50, $1.55 from the high side. No one ever sells enough when the market's at the low end of its recent range.
Yeah, I'm sure, and especially when you have these volatile ranges, like you just said, 4 and a quarter in corn down to like 350. There's a lot of opportunity, and I guess a lot of people that needed to hedge that hadn't hedged.
Yeah. And it's important to point out, with a lot of these farmers, especially out here in Iowa, you're looking at a difference in revenue because they'll produce 200 bushel to the acre. So you think 75 cents hurts, but it doesn't sound, that great, or it doesn't sound like that big of an impact, but it's $150 an acre in lost revenue. And you're farming thousands of acres, and sometimes that 150 is all they're making if they're lucky, on from a profit standpoint. And so it definitely went from a feeling of elation, at the high side, to a feeling of despondency at the low, which is pretty common. That chart that you see with the ebb and flow of confidence and fear when it comes to trading. And that's something that I've seen firsthand with farmers just in the last couple months.
Yeah, absolutely. So, what right now are we focused on right now on a day-to-day basis? Like, what the past week and the next week are really people looking at? What are the key catalysts?
Right now, we're really paying attention. There's a major crop tour that's taking place. So this crop tour is, I think, 25 years old now. It's the Pro Farmer Crop Tour. It's done with a major media group, and they start in the far southeast corner of South Dakota. So they'll start in the Sioux Falls area, and then there's a group of probably 100, 200 people at each side. So they'll start in Sioux Falls on the western belt, and they'll start in Columbus, Ohio on the eastern belt. And everyone gets a route that they take each day, and they'll go all over each portion, in Ohio and South Dakota into Nebraska and into Indiana. And each group they all come together each night to a certain location and put together what they're seeing and come up with some yield estimates maybe for each state, taking into consideration historical yield patterns and areas that produce versus areas that don't, and things of that nature. So they're actually out in the fields They are to take samples every 10 to 15 miles, and they'll grab a corn sample, and it all follows the same procedure. So I was on the tour 4 years ago now, and I still am tired because it's a lot of work. You drive 1,500 miles over that week, and see all kinds of different field setups and things like that. So we'll be watching to see, if the USDA is accurate in their ideas. We saw an August 10th report 10 days ago. The USDA came out and really kind of shocked the market. Not so much on the corn. They raised corn. It came in about a couple bushel higher than anticipated, and 4 bushels higher than what their previous July estimate had been. But in soybeans, they increased their yield projection by 3 to 4 bushel to the acre, which is huge in beans, for two reasons. First of all, beans, it takes a lot to really kind of encourage that much of a swing in yield for soybeans, just because they tend to be pretty stagnant in how they yield. So 49 bushel to the acre nationally could be considered a pretty common yield projection, and one that you could be comfortable with. And then secondly, they projected this big shift in yield ahead of what would traditionally be your critical time period for development. So not knowing what the weather looked like and things like that was really kind of interesting to see them make this big adjustment. And as a result, it increased soybean carryout to the largest level we've seen, if not in recent memory, in at least 12 years. And so the USDA's kind of had three big numbers that they've released in their monthly supply and demand updates that have kind of really caught the market off guard. The first one was a bullish surprise in May, when they came in and increased year-to-year exports by over 200 million bushel. So it caught a lot of people off guard, simply because Brazil's had a reasonable sized crop. Export demand in China, the debate was there that it was starting to slow even ahead of any of these trade war talks or anything like that. And so it was really surprising to see the USDA come out with this bullish new crop estimate right off the bat in their first projection in May. And then they came out in July and said, because of the trade war, they were going to go ahead and remove that 200 million bushel increase and then some. So they took 250 million of demand out and increased carryout subsequently. And then in this last report, they increased production by 200 million. So the fact that we're now looking at a 785 million bushel carryout, which could be 7 times what one would consider pipeline, a minimum amount of beans that we need to get from one year to the next. It's a huge amount of carryout. So we've done that, but we've also seen the market really kind of recover after that last report came out and trade back up to levels that we saw, or within a dime of levels that we saw, prior to that really negative report.
Well, that's what I was actually just going to note. I brought up the charts as you're speaking, so everybody can see, and that's exactly it. It looks like soy, as of this morning, now we're down on the day now, but soy fully retraced, and corn pretty much retraced.
Yeah.
Those kind of moves from that past Friday, I guess.
Yeah. So, at this point, it kind of shows you that maybe we're struggling with what the accuracy of the USDA projections look like. And so there's been a question brought up of staffing, because we know that there's still been issues. The administration has brought it up as well, that we have nominees and people that need to be put in these kind of higher ranking positions, are still being held up in certain areas. And then, just an uncertainty as to whether or not the USDA is overall accurate, not only in production, but in demand, simply because you're looking at export sales that even without China's starting to come back in. Obviously, we unloaded the third cargo of beans there this morning. But even without China, you're still seeing export demand, the third largest for a new crop in the last, 5 years. So even without China in there, we definitely have interest for our bean buying. So there's a lot of uncertainty as to what we're actually looking at. But right now, the market itself reacted negatively initially, but positively on the long term, versus what you would anticipate, especially with a carryout the size that we have.
Yeah, and what about with all the talk with tariffs? What is the thought on U.S. export, like the demand pace?
Yeah, the thought is, there's two very different setups right now. There's the what the narrative is, what we're hearing, what we're seeing, things of that nature, and then what actually is taking place. And so, like I said, we're starting to see some interest come in and buying from other countries that typically aren't in our top 10. And then again, like I said, we're looking at being right in line with the third best export pace so far. So the idea is that even if China doesn't come in and buy directly, we have other buyers that are interested, and we'll continue to see them come in and make purchases. Mexico has been a big buyer. There's just been other countries that aren't typical, Netherlands, um, you know, Asian countries. We've been seeing that. Pakistan's been in Dubai.
All right, sorry about that, everybody. Angie had a bit of a computer issue and lost us, but now she's logged back in. Angie, you back?
Yes, I am here.
All right, good. So you were talking about export demand at the time and
Mhm.
looking at people picking up the slack for possible lack of exports to China.
Yes. Yeah. And that's what we're seeing. I mean, obviously, there's not, when you look at world demand and you look at global supply being centered as it is, basically North America, South America, there's only so much to go around. So we're definitely seeing the interest from other countries step in, that maybe traditionally Brazil would supply. They are coming to us. And then on top of that, we are seeing China kind of return to the marketplace. As I said earlier, we've seen 3 different cargoes unload here over the last week or so. So that's definitely an interesting development, albeit not unexpected. I mean, we still have old crop sales on the books to them that they haven't canceled. We do have a large outstanding export, amount of beans. So we are getting to the end of the marketing season here. September 1st is the date where you cross the bridge from old crop into the new crop year. So everything kind of gets pushed together. I joke and say into one crop, because we spend all year talking about old crop, new crop. Well, whatever's left over at the end as of August 31st becomes new crop. It's just a carry in. So we do have a large amount of outstanding soybean shipments that'll likely go, perhaps after the 1st of September or something of that nature. And
Yeah.
so you could see some old adjustments made. But really, when it all comes down to it, it's all the same. It's just a
So
crop.
so when's the next update on last Friday's USDA report?
Um, September, I believe the 11th. Typically, it's the second full week. But with this year, yeah, I would say the 11th or 12th. I'd have to double check on the date, but it'll be the second week of September. There, the week after Labor Day.
Okay.
The USDA will come out, and then, of course, we'll really be paying attention to the report that's released on the 28th of September, which will be quarterly stocks. That'll give us some real insight into what actually was left over in the USDA's mind as of September 1st. And that'll be the final old crop carryout number used for the rest of going forward. That'll be the final number, of the 17-18 crop year that we'll see from the USDA.
All right. And then putting you on the spot a little bit, is there any
Mhm.
trade or two, anything that sticks out at you, whether it be buying corn, selling wheat, or anything on the radar that you think is attractive at the moment?
Yeah, I mean, to me, I think that corn has some tremendous upside depending on what the yield looks like. So that's what I've been looking at. Maybe not necessarily coming out and exposing yourself entirely to futures risk if you have a limited amount of exposure you want to have to getting into the commodities market, because until we get NAFTA and the Chinese issues resolved, it's going to be a bit of a whipsaw type trade. But to me, I think based on what we're looking at and the potential that we have for corn to come in, yield wise a bit lower than what the USDA has been projecting, I think you could see a good 20 cents or more worth of upside in the corn market as we work our way towards January.
Interesting. That's
Which seems like a long way away, but in the corn market, January really isn't. It's because harvest will be here before we know it, and then all of a sudden it's Christmas.
yeah.
Welcome to cash grains.
Right. Well, summer's flown by. We got football season starting up soon, school starting, and then next thing you know, it's Thanksgiving and Christmas.
Yeah,
Before you know it.
exactly. That's next thing you know, we're complaining about heat next August. I don't know. It's always a fun time to see how quick time, how fast it can go.
All right. So you're bullish corn,
Mhm.
generally waiting for the different releases and things like that, and obviously geopolitical events. What about any thoughts on soy or wheat?
Soybeans right now, I think for what we have going on, your risk of discovering perhaps that the crop's not there, the risk of maybe looking at the China U.S. trade issues to be resolved. I think that soybeans are kind of fair for where for what we know. I mean, if anything, you could say that maybe they're a little bit overpriced based on the actual number that the USDA is printing. But I would say based on the unknowns and the uncertainty that we have going forward, with production and demand, I think they're probably pretty fair priced right now. We're still trying to figure out. There's some issues going on in China with African swine fever. So that's something that's new. We've seen the third case announced over the weekend. That could be have a huge influence on what you see for Chinese availability when it comes to hogs. So you could see them have to go out and really kind of slaughter some hogs preemptively. Which slaughter is such a horrible word, but
Huh.
they're going to have to obviously and go out and try to avoid these hogs catching this disease, which is it's a fatal disease anyway. But the idea is that if they were to go out and do that and not necessarily look to replace the production, right away as they try to figure out what's going on with this disease, that could limit their need to import soybeans to crush. But at the same time, you've seen the hog market on the flip side rally, limit up on Thursday, near limit on Friday, or at least near the traditional limit on Friday, and remaining quite strong on the idea that China's going to have to step up and start importing our hogs, which would influence an increase in meal demand domestically. So there's going to be a lot of questions as to what that's going to mean going forward as well. And really, the last thing the Chinese want to see is they're in the middle of a food fight, so to speak, when it comes to tariffs and trade.
I apologize, everybody. It looks like Angie's computer might have dropped again. But a lot of great information from Angie in the past half hour or so, talking about the ag market, and got one call out of her. She seems to be bullish corn, looking for a move. She was saying about 20 cents higher, so that's a few percent higher. And we have the two reports coming out September 11th and towards the end of September, which will obviously be very important, and paying attention to geopolitical risks as well in the ag space